Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Gunn. Jumping into the charts on this October 24th. Basically what has transpired, there's been a lot that has transpired in the overall indices. Despite the markets being up today, the S&P up 1%, the Nasdaq was just up about 1% as well. It's really surprising that despite the weakness, the major, and I should rephrase that, it's not weakness, it was mainly just the Chinese stocks were taken to the woodshed and got slaughtered today. So even with the massive weakness in the China sector, the S&P has still managed to squeak out a gain. Now, this is really key and important because it is showing that there's massive relative strength in this market. And this probably is going to coincide with the markets expecting a potential Fed pause or a slightly slower process of rate hikes, or maybe they're winding the rate hikes down. But when you factor in that the likes of Baba were down 20%, the likes of Baidu were down 20%, you had these massive gap downs. This shows that there's big time relative strength. I mean, still Baba's down 12% today and the S&P is still squeaking out a gain. You rarely see the markets still positive when Chinese stocks have had such a massive slaughtering. Now, the beautiful thing about these China stocks is you've had a big time reversal signal, a massive buy program off of the lows. We added to our BABA. Our average is sitting at 69. These are the levels that I think we can actually tuck away these long-term Chinese plays because they're now trading at forward PEs that are basically like value stocks, but they're still growing at exponential speeds. Now, the importance of where BABA hit today, I just want to go over this chart with you. We had this original head and shoulders here. Here you have a left shoulder, or you can have this here as well. You have your head over here, and you have your right shoulder. The head and shoulders pattern is now complete. You hit your downside target, and you've reversed off that level beautifully, might I add. So that is extremely important and healthy to see. Now, if we flip back to the S&P 500, the SPY, you can clearly see that you're running into this downsloping trend line of resistance, which you're tagged and you've slightly pulled off of. Now, in the coming days, we do have a bunch of earnings starting tomorrow. The mega caps will start reporting, so that's clearly going to be market moving. I think the big name tomorrow is Microsoft. You can see Microsoft has actually had a technical breakout. So here you had your breakout and you confirmed it with today's upside. You filled a key technical gap over here. Massive resistance on Microsoft is going to be this original COVID trend line, which connects your pivot low over here, your pivot over here, a little bit of chop and intersection. But you could get a float up in Microsoft, which could also coincide with this type of gap fill. But nonetheless, this is technically bullish price action on Microsoft, and it does signal and favor more upside. Let's flip back to the SPY. I want to show you a 4-hour chart on the SPY because I do think it's really intriguing. On the SPY, we have a little bit of this inverse head and shoulders here. So here you have your left shoulder, your head, your right shoulder, and this would be your neckline in which you have actually confirmed and broken above. So believe it or not, the upside of this inverse head and shoulders pattern on the S&P 500 intraday actually takes you to the retrace of this neckline. That would be a clinical picture perfect technical retrace, and that's why I do think it is very likely that we do see that pattern play out to the upside. Again, we kind of have a little bit of a confirmed breakout also on the daily chart, which signifies potentially more upside. You can see here's your left shoulder, your head, your right shoulder, and if this pattern plays out, there's substantial amount of upside for these markets in the short term. And this would most likely coincide with the DXY softening. So if we take a look at the dollar over here, you can see that the dollar is basically teetering on this important trend line, connecting your pivot to your pivot to your pivot, and you're basically closing right on that level today. Now, after such a hard reversal on Friday, you would naturally expect the dollar to have a little bit of upside, which you can arguably say that it has had a little bit of upside, but it's significantly reversed off of the lows. So that is some pretty short-term positives for the market. Now, the bigger, longer-term pattern, you have this inside bar bear flag, And then you have also in the hourly this bear flag pattern. So the likelihood of this pattern breaking down is more likely than not, which does take you to a move down to this 110 level, which would be a great reprieve for the overall markets if the dollar does fall. Let's take a look at the US 2-year yield, because we did have a massive reversal off of that level on Friday as well. You can see that the 2-year has popped up. You got a little bit of a retrace back to that breakdown zone, but you've managed to still close below it. So now in the coming sessions on the 2-year, you really want to stay below this yellow trend line. If you can consolidate here and make a bear flag, then it is likely that yields should move lower in the near term. Let's take a look at the US 10-year yield as well, just so that we can compare the long end rates. So let me just type that in again. So if we take a look at the US 10-year yield, again, you got that beautiful daily reversal signal on Friday. You did retrace most of that gains, but you've pulled substantially off the highs. So it is a positive day for the 10-year yields, but after that reversal, you would naturally expect a retrace, and it's good to see that that is now still technically forming bearish consolidation inside of this wide range red bar. So as long as we don't take out this high, I do think yields on both the short and the long term come down and see some downside. Obviously, if we look at oil, let me just pull this chart a little bit longer here. Oil's pretty much had a muted session. You're making a little bit of bearish consolidation on the daily, which does fit our overall thesis that we see downside action, at least to the $79 gap fill area. Natural gas actually did see a bounce off of this level, so we're almost in the money on our oil trade over here. Where I think natural gas can float up to, well, in the short term, you have resistance at this downsloping trend line, which would coincide with these major pivot tops over here. I think that's your minimum retrace zone, but I think after you hit that level, you may consolidate for a couple days before hitting this move all the way back up to the 665 level. And that would be a beautiful, beautiful gain in our pocket should natural gas see that type of bounce. Let's just flip back to the QQQ now. The Qs were also very strong today. You can see that the Qs have potentially broken out of this downsloping trend line over here. So whether we see confirmation tomorrow will truly be on the back of what Microsoft and some of the large tech caps. Tesla is an intriguing chart as well, because if we pull up Tesla, obviously Tesla is a market leader having a big $1 trillion market cap. Tesla made a new low intraday and then reversed and closed back inside, basically not confirming this break of the head and shoulders pattern. If Tesla can recapture this head and shoulders and ultimately close above these two wide range red bars, then this market is going to have a lot more upside in my opinion. And the biggest moves come from failed moves. So if this downside head and shoulders pattern doesn't trigger, Tesla could have a run up to this 238, and at the best case scenario, this 265 area. Let's just take a look at Baidu. So Baidu is another Chinese company that was slaughtered and taken to the woodshed. We did start accumulating. We added more today. I think we're beautifully positioned for a well positioned bounce over here. You can see a massive accumulation occurred today on a massive influx of volume. The last time we saw this amount of level of volume traded, we're talking 5.43 million shares. You had this massive reversal and gap up to the upside, which was about a 55% rally in a large cap China stock. So I do think we potentially could see some sort of a signal like that. Maybe it's on the back of China reopening. Maybe it's on the back of them easing or lifting their COVID policy, or maybe it's even on the back of the PBOC stimulating and starting to endorse quantitative easing. So there's lots of variables that I think could push this to the upside. Obviously, they collapsed today on the back of China's zero COVID policy remaining and Xi likely getting in. But when you start having these quality Chinese mega caps trading at a forward PE that are basically like value plays, but these are still growth stocks, you have to start accumulating and even tucking these away for the long term if you are not a swing trader. Let me just touch base on gold. Gold basically saw a little bit of a down day. That was on the back of the US dollar, but nothing really negative for gold here. This is a little bit of a pause day, so to speak. So I still think there's more upside in gold. If we take a look at silver, silver also is holding this key trend line over here. You got a little bit of a retrace, bounced off the lows. You're far off the highs, but again, silver's taking a little bit of a breather from that beautiful monster reversal candle Let's take a look at the IWM. It was lagging today, so which shows that the small caps were under pressure. If you look at the IWM, I still think we can basically fill this gap up here, which we just slightly missed it intraday today. But ultimately, I do think we can get a retrace back to one of these two upsloping trend lines, and that would certainly lift the Russell Index 2000 index. But if you look at the volume accumulation that has occurred on the daily charts, this is a massive level of volume. A lot of buyers and shares were exchanging hands, which tells me that these markets likely have more upside in the near term. Let's take a look at the SMH, because the semiconductors are a leading sector. The SMH is partially breaking out of this bullish flag consolidation over here. You can argue to say today was your confirmation by closing higher on the daily chart. So since you have confirmed a breakout on the semiconductors, you would favor that the tech earnings are going to be positive, which could push the semiconductors up to this 200.41. You do have a short-term resistance point on this downsloping trend line over here. When we run into that, you will be at this wide range red bar. But the fact that, again, on the semiconductor basis, this volume accumulation that you have put in is second to none, you would favor more upside in these markets. But everything is going to hinge on the fact that we have Microsoft and big cap tech earnings. Let's take a look at Apple. Apple's later in the week. I think it's on Friday. Apple's again also having a technical breakout over here. Here is your breakout. Here's your confirmation. You filled the technical gap today. You have a secondary one up there, and you have a third one up there. So if Apple has strong earnings, if Microsoft has strong earnings, that's pretty much, I think, the only thing that's going to stand in the way of this market from moving higher is the earnings call. Let's take a look at Meta. Meta is another one that had some interesting news. Potentially the DOJ, the Department of Justice, is banning TikTok, so that's why Meta shot up, but it did pull off substantially. Again, Meta is another one where you're showing massive accumulation levels at these patterns. Believe it or not, this downsloping or this parallel downsloping channel is a showing great accumulation signals. And when you have a downsloping channel like this, the price action is more likely to break to the upside. Bitcoin is a little bit disappointing now, although you have pretty much confirmed a technical breakout. You can see this downsloping trend line hitting this major pivot. Bitcoin actually broke out on the weekend. You had this breakout candle which confirmed it to the upside. Now it looks to be that you're getting consolidation. As long as you hold above this yellow trend line, Bitcoin still has more upside, or likely more upside bias in the near term. So we are currently long Bitcoin, and I am optimistic that we see continued upside on the back of potentially stronger than expected earnings. What else can I touch base on today? I think that pretty much covers it all today. Again, let's just do a quick SPY check, SPY. So again, you can see that the SPY did hit resistance, slowly pulled that. But it'll be interesting to see if we get this inverse head and shoulders pattern playing out over here. You have this head over there, that shoulder. If we get that confirmed move up to the retrace of this neckline, that would be a beautiful technical pattern that is played to the upside and to the downside. You get your technical retrace, and that would certainly mean a lot of bullish price action for the underlying stock. But this week, anything could change on the back of earnings. Again, Microsoft is a big name tomorrow that does report, so we'll have to wait and see what transpires there. And if the technical price pattern is showing that there is more upside bias, or likely upside bias. So let's just keep that in mind as we head into the earnings season here with the mega cap tech plays. That's it for today's video. Please give this